What's up, guys? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today it's going to be part 3, the beginner's guide for technical analysis, and we're going to go over candlestick patterns, from single candlestick triggers to 2 candle patterns to 3 candle patterns. Again, we're going to keep them simple and see how parts 1, 2, and 3 can all work together to make successful trades, keeping it simple and high probability scenarios. Guys, stay tuned. I'm going to tell you all about it. Yeah. Alright guys, let's get the disclaimer out of the way first. I am not a financial advisor and this is not financial advice. Alright guys, real quick before we get started, I want to pose this question early in the video. Are you interested in the same type of analysis for the standard stock market? I would love to be able to use both crypto and stocks and kind of shake things up a little bit, but I want to make sure not to alienate a majority of my audience if people want to see crypto and crypto alone. I'm fine either way. Shoot me a message, let me know, put in the comments if you would be interested in that, and then I'll go from there. Alright guys, we're going to get right into the candlestick patterns, and we're going to keep it simple. Like I said, first pattern, we're going to do single candle triggers. First one is a hammer. A hammer is a very powerful trigger. You see that the high of the candle and the open or close, the body is very small compared to the wick. The wick is going to be 2 to 3 times the size of the body at least for this to be a hammer, and you're going to want to come at the end of a downtrend or to touch a support level if the asset or the coin has been running sideways in the consolidation period. If it tries to sell and break down and this shows a price rejection and it buys back up close to where it opened, either slightly above or slightly below the open, doesn't matter green or red, but it's a downward price rejection is the big component to this. With that, we're going to get into a chart to see that. One big one is Ethereum. Ethereum recently, within like the past month, had a nice big hammer here. This is a hammer here. And again, it was a red candle. Irrelevant at the point. It was at least 2 times the length in the wick. And I don't chart Ethereum often because I don't really trade in Ethereum. But it was important to note that it hit this level that had been acting as a support. This was a support here from January 23rd. It broke above it and hadn't stayed below it since then, and then went way above it and didn't even touch it. It hadn't touched it since January 31st. This wick got sold down so low that it touched that level of support, and what likely happened is people who are savvy and smart investors, smart traders, will set limit buys lower than people would think. If you look at the depth of a trade, you'll see some sell orders or some buy orders like way back. You'll see way back levels of orders, and like, man, they're trying to buy for half the price. How are they going to do that? You see these long wicks, and you see something like this, and you hit this old key level of support. But support holds true, resistance holds true, no matter how long ago it started and how long ago it was formed or how long ago it broke. If it was a support and it broke, it is now a resistance. If it was a resistance and broke, it is now a support. Again, this shows you here, putting it all together here on the MACD. This signified the depth, the deepest point of sell volume on a histogram, and at that point it started to go up. Just here it started to turn sideways. It was going almost straight down, and at that point it started to hook. it hit a key level of support. It was the first day, excuse me, it was the day prior to the 7-day crossing under the 50-day. So this went down very quickly. This dropped significantly and quickly over that all-time high. And that was a long run up and a significant downtrend. This was likely going to be the 50% line on the Fibonacci retracement if I were to run one now. But key support, key moving average crossover, and MACD was showing very deep sell volume, which is likely to not, it's not likely to stay that deep for that long when it hits the ground. All right, guys, I got another hammer, and this one was from a sideways trade. This was trading sideways. Where is it? Oh, the favorite didn't hold up for me. So I remember what it was. It was XLM. And this just recently happened. This is one I will say right now, it's looking like it's going to be in an uptrend. This hammer wicked so far down, and you see this has been trading sideways. Not super down, I mean slightly down, but not super down, not like a really bad downtrend. So it's trading sideways, consolidating. Almost no movement on the MACD. I mean, it's very little from here to here. I mean, there was a crossover here. I mean, it didn't even really cross. It just stayed at equilibrium. Like it was under, got to zero, and didn't really cross up. It went back down. Now it crossed. This was the third day after the cross. But look at it. It's the day that the 7-day crossed back above the 25, and now we're trading back above the 50. The next day, 7 came back up, crossed the 25. 7 is going to cross the 50 again, and we're going to be right as rain. We're going to be out of the potential downtrend, and XLM is going to make a run. I don't know how much, but XLM is going to make a run. I'm going to have to make a video about this tonight or tomorrow before it gets too far gone, but training video first. Let's get the training video out of the way first, and if you watch this far into it, you'll get a little hint of an uptrend, a hint of a position that looks favorable. All right, guys, we're gonna go right into the 2 candle patterns. I'm sorry, 1 candle pattern, bearish pattern. The reverse of the hammer is the shooting star. Where is the shooting star? I did not. Is this it? Yes, shooting star. It's an upside down hammer. If you need to remember it as an upside down hammer, remember it as such. If you want to know all the names, I don't come up with them. These are all names and that have been used forever, or at least as long as I've known them. Now this has to happen at the end of an uptrend. This is going to be where you try to buy as high as possible. The chart is trying to go as far up as it can, and it just runs out of steam and it sells back down close to where it opened that day. The best example I have of a shooting star is from KNC. And KNC I'm going to go into a handful of times because it has a lot of patterns that all kind of hit at the same time, or close to the same time. But KNC, you zoom in here, you see this is a shooting star. It opened here. It bought all the way up. I mean, this is likely a 10 to 15% increase. More than that. Let's say 15 to 20% increase that all sold off same day and ended up almost going red. Now it didn't sell immediately after that. It went up again, but it never broke this resistance that was not really there yet. It wasn't defined resistance yet. This line became a resistance because of these 2 candles and moving forward. And right now it hit this resistance again on the current trend. It couldn't break it here, and it's struggling here. I'm hoping that it finally punches through the resistance because I believe it can go up near $4, but that's where I'm hopeful. Anyway, this shooting star triggered a downtrend. It triggered this single candle, triggered this downtrend. This for me is an immediate sign to get out of a trade. If there's nothing more, no other candle signal gets you out, the shooting star has to. The shooting star is almost infallible. Now I guarantee you someone's going to find an example where there's a shooting star and it keeps going up, but it's not often. Alright guys, we're going to go into the two candle bullish. And the two candle bullish is a bullish engulfing. You're coming down a downtrend and you have this red candle, and then your next candle is a green candle that is bigger than the red candle. It engulfs the bear candle. The bull engulfs the bear, bullish engulfing candle pattern. So that being said, KNC. This is where I bought KNC. I bought it on this because it touched the 25-day moving average. And that was my trigger. It was coming down off a downtrend. This 25-day moving average just happened to be at the 61.8% line on the Fibonacci retracement. I'll get into Fibonacci in a later technical analysis, but it also hit the 25-day moving average. The next candle went green, and when it finished in this engulfing pattern, that is a guarantee. I bought early. I bought early knowing that it was going to eventually rebound off, but it could have sold sideways. It could have ran sideways and traded sideways for days before I had this uptrend. This candle confirmed the uptrend. Coming off of the downtrend, engulfing this confirms the new uptrend. Then you have the opposite of that is also true. You have a bearish engulfing. Now a bearish engulfing is going to be the opposite, where it is going up and then a red candle is larger than the previous green candle and the bears engulf the bulls. Now with this we have Bitcoin. BTC shows a good example of a bearish engulfing when I can find it. Okay, we are here at the top. This candle sells down. I mean, it tried to sell way down, but it sold down right around to the 7-day moving average. It sold right to it. So two signs. You have a large gap between your 7 and 25-day. You have an even larger gap between your 7 and your 50-day. And you are gapping the 7-day with your current price. Gaps don't last. Guys, please, if you don't remember anything else, gaps don't last. You're going to gap the 7-day, it comes back to the 7-day. You gap the 7-day, it comes back. If your 7-day gaps the 25 too much, it comes back. It always comes back. Remember that. Your histogram, your MACD is at the top of the top. Your histogram is deep in the buy pressure. It's got to come down. You peaked, the next day it starts to come down. You have to sell before this cross, because by the time this cross happens, you've already lost $3,000 on your sale, or close to $4,000. I'm not doing the quick math here, but $3,500 to $4,000 on your sale. Just if you skip this candle and you don't sell before this candle's done, you sell somewhere in this day. If you sell at the wrong point in this day, you're down. I mean, you're not necessarily down if you bought in here. At the bullish engulfing, look, came down off of a downtrend. Downtrend, 7-day crossed over. It traded sideways for a little bit. Remember, 7-day crosses under the 25-day, it's going to want to go back up. We've seen that here. We saw that with this. This was the most recent call that I made with the Bitcoin at 70K. Seeing this 7-day coming close to the 25-day and waiting for this cross, I knew it was coming. I knew the pressure would be there. I knew the volume would be there. I knew it would cross over and start to buy. But you also have to know it's going to come back the opposite way. If you know that a trigger is going to make the pressure switch in your favor, you have to know when a trigger is going to make the pressure switch against you. Nothing lasts forever. Nothing goes up forever. Nothing goes down forever. You have to be predictive. You have to be intuitive and realistic to know that this MACD is not going to stay this high. Not long. It's not going to happen. You're not going to get it this high this long. Alright guys, those are our 2 candle patterns. And now we're going to go into our 3 candle patterns. The morning star and the evening star. These are very strong patterns. And I mentioned the morning stars on the video where I did 10 technical analysis on 10 coins. Every one of the coins that had a morning star pattern all went on a run. So take a look back and look at that, because I'm only going to show a couple of them, but they all went on a run. So Morningstar, the big Morningstar was banned. And we know what happened with banned. Don't worry about that either. It's at a resistance level. It's going to be fine. But you know, we had a little bit of sell pressure, but I mean, it's sitting on this resistance line, and to get above it. So the morning and evening stars. Morning star, pressure coming down. You get a bull, you get a bear candle, and this doesn't have to be bear or bull. It could be flat. It could be completely just a plus, a doji with no body to it at all. But it's going to be a very tight indecision candle followed by a buying candle that is nearly the same size as the sell prior, and vice versa the other way. Morning star when your star happens at the bottom, evening star when your star happens at the top. So here is our morning star here. Now this morning star was very important because the star was at a resistance line or at a support line, and our morning buyback, our buyback from the morning star, the confirmation, sold down so low it broke through 2 additional resistances and bought back. This was, I can almost guarantee you, this was an immediate drop to this level and buyback so quick that most people probably never knew it got down that low. It ran through so much that there were limit buys incoming from all directions, and it immediately bought back up. But it shows the support levels, and on the Fibonacci, this was a 61.8 and this was a 78.6. If it went below that and held below that, the Fibonacci is broken and it's in a downtrend. If this doesn't reverse back, if this doesn't flip back. But again, you see it flip back, we're looking good. Big uptrend, and it happened almost immediately. Well, it was immediate. After this candle, it was up, 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 sideways one day, and then way up. Now we're going to have this little retracement. We'll probably stick around $16 for a little bit until we break this resistance, and then we're not looking at another resistance to 18 and some change. I mean, there's going to be one right around $18, and that's going to be a psychological barrier as well. But the big heavy resistance is going to be 1880 to 1890. If we break that, we're looking, I'm really looking to take profits between $23 and $26. I'm hoping for 26. 26 is my golden number there. But anyway, that's our morning star. We have another morning star in HNT, and it's again, it was around the same time. A lot of these coins made morning stars around the same time. You see sell down, sell down, sell down. Almost no volume, indecision, up, down, open around the same as where it closed. It was an indecision candle. No one knows who was going to win. And then, boom, the bulls win. And it sells back to the 7-day. Look, this happened, this indecision happened right around the 25-day. Crossed under the 7. Touched or got very close to touching the 25-day on a wick, bought right back up to the 7-day, and then went above it. And now we're trading above the 7-day moving average, and everything's moving up again. The MACD turned down, And this was an odd one because it never really got low. It barely turned down and it came right back up. So HNT, I don't know how long this uptrend is going to last because it wasn't a whole bunch of pressure. It wasn't coming off of anything big. So I don't know how long it's going to last, but man, right now it's running. So those are our morning stars. Our evening star, we've got Doge, everyone's favorite crypto. We've got Doge. And where is our evening star? Our evening star is right here. Came up, indecision, bought up, sold down, finished near the close, or closed near the open, and then sold back down. And then that was the start of a downtrend. Big up, indecision, big down, downtrend. Now this was also on a support line, and I'm going to assume that there was a resistance here, but I'm not 100% sure. I don't really care enough about Doge, but I'm going to say this was probably the resistance because it was near the all-time high, and it was 3 consecutive candle bodies stuck, not breaking it. So I'm going to say that was a resistance. 7.89 cents is going to be a resistance if it continues to trade up. I'm screwing this all up, but if this continues to trade up and it gets to come back up to 7.89, that's going to be a resistance. That's going to be a level of resistance for it. All right, another evening star in IOTA. Where is it? Okay, I see it. Do you see it yet? IOTA's evening star. And again, levels of support and resistance drawn. This resistance wouldn't have been known yet because this was the highest point at that time, so it wouldn't be known to be a resistance, but once you have 3 consecutive candles all body touch this but can't break it, that line is automatically resistance at that point. But coming off the 7-day moving average, way up, gapping way up above it, straight down, back down to the 7-day again, and then we're trading down, and we go down and down and down. And actually, funny thing is that you could probably call this a hammer. They're very close to it, but if not, if you're like, yeah, I don't know if that's a hammer, that might be, it might not be. Think about under 7-day, touching the 25-day, which a lot of these had touched, so you're thinking it's going to go up, but nothing's really confirmed it. It got close to touch 25-day here. It did go up, but not that much. It didn't get back over the 7-day. But this hammer, and then an engulfing candle back above the 7-day, sets it off. Now again, these aren't always large upswings. They're not always long-term upswings. But they are changes in the market direction as far as retracements go, and then extensions. So again, this engulfing before there was a large down created this new all-time high. Now there was some sideways for a little bit, but you know, you're talking about a couple of days of still growing and still hitting this resistance. So it wasn't really that it was going sideways, so to speak, but it was just really having trouble with this resistance at 139. So anyway, guys, those are single candle triggers, 2 candle patterns, and 3 candle patterns, all of which, when coupled with knowing where to look on your moving averages and your MACDs, your MACD location. So again, we're going to look for, what was it? This was our, here. This was our evening star. Look how high this MACD is. This MACD is super high at this point. You have to know it's going to come back down. Nothing stays that high. So, high, big gap, evening star, get out, wait for it to come down. It's just, if you're trading highs and lows, These are your signals, and they are right more often than they're not. Occasionally you're going to get burned. Everyone gets burned sometimes. There are bad beats. Sometimes you have the right hand, sometimes you have the right calls, sometimes you have everything right and it just doesn't work out for one reason or another. Something happens and it doesn't work out, but it doesn't mean you stop doing the right thing. You do the right thing, you look at your calls, you look at your signals, and you look at your triggers, and you will be right more often than not. Guys, I really hope this helps, and I really hope it helps to put everything together, all the things I've been going over. Establishing a trend line, establishing your moving averages, knowing how your chart interacts with the moving averages, how the price action interacts with the moving averages, how your MACD signals when you're going to be swinging your trends, or how you can predict that the trend is going to change back one way or another, and then your triggers. So you've got your moving averages, you've got your trend. You think something's going to happen because you see this leveling out or flattening out or whatever the case might be. It's too high, it's getting high, it's got to come down. There's no way it's going to stay up here that long, but when does it come down? Here's my evening start, it's coming down. We get out here and you save yourself a lot of downfall. If you bought in, if you got lucky and you bought in at the start here, this bullish engulfing candle, you buy in here and you're up and you're up. If you sell at 140 instead of 156 off of 45, you're still in an incredible amount of profit. You are still in an incredible amount of profit and you're doing well. So guys, with that being said, I'm going to call it here. This video has been going long, but it was very important. I hope you stuck around for the whole thing. All of these patterns, all of these candles are very important. Until next time, guys. Peace.